I thought today was actually an encouraging day. We had talked last week about, and by the way, great having you on board. It's great to have you here. Thanks for helping out.
Establish that early.
But we had talked middle of last week about 2410 sort of being a very important level in the S&P. I think it got down to 2417 today. Pete can speak the VIX. That was down 7.5% today. The Russell still concerns me a little bit, the IWM, but as long as that stays above 130, I think we're okay. So doesn't feel like the worst is over, but at least today gave you a glimpse of levels that it needed to hold, and it did.
Well, you know, we have a dynamic here where there's been two things that I think have been driving price action this year. It's been central banks and it's been earnings. And if you think about where we are after almost 13% earnings growth in the second quarter and central banks that have bought another $2 trillion of debt, going into a period where I think central banks really are about to tell us, possibly at Jackson Hole in a couple days, that the getting is not going to be so good. So to me, buying a dip means that obviously ultimately you think fundamentals are fine. I'm not going to tell you that they're derailed, but I do think seasonally we're in a difficult place.
You think that means that they're going to tighten? Because the market's saying that th're not going to tighten.
I think central banks are not as dovish as people believe they are. And I look at global data, and I think they should not be as dovish.
We're going to get to Jackson Hole in a few minutes, guys.
Sure.
So hold that thought. I want to go back. No worries. Pete and Jerry, I want to get back to, the idea, because there's two ways to look at it, which is we've had two triple-digit declines for the Dow in like the past 3 weeks, which normally is not a big deal at all. The reason we're making a big deal about it is because we haven't seen any volatility for about 6 months. Do you think we're seeing cracks in the foundation?
I think there are some cracks in the foundation, and I think it's all about catalysts. I mean, now that we've gotten basically through earnings season, it's like, what is the next catalyst right now in front of us? A lot of that's probably going to be political, some of it economic as well, but a lot of it's political, and I think that's why we're seeing...
What about technical?
Yeah, there might even be a little bit on that side of things. I'll tell you what, you talk about buy the dip, though. I mean, on these pullbacks, I think there are opportunities out there. And if we already know the facts and the fundamentals, Guy was talking about facts, fundamentals. When we look at something like a Home Depot, for instance, when it was trading 160, probably a little bit stretched. Then it got back into the mid-140s just now. Now today it had a fairly strong day back. Why is that? Well, you look at the actual numbers that they put up. That's a company that I still want to buy, Sully, because they are doing it on the e-commerce side of it. I don't say that they're necessarily Amazon-proof, but they can compete with Amazon like others have proven that you can compete with Amazon.
There's a lot of stuff you're going to buy at Home Depot you're not going to buy at Amazon. I mean,
you're absolutely right. Well, look at their same-store sales numbers up.
$300 to ship.
Not only that. Look at their sales numbers, but if you look at the sales numbers up 6%, and people are selling it. Why? Because it's a little stretched. They're a little nervous. Everybody hears Amazon, Amazon, Amazon. Not everything is something that Amazon can absolutely dissemble absolutely right this moment.
Also, the home improvement space is not growing floor space to beat the band. I mean, they're not competing in the same way with Walmart, that Walmart is competing with Target and Costco and Sam's and the Europeans, all the guys that are there. I think the fact of the matter is you also have a housing market that's a tailwind. There are parts of retail that make a lot of sense. There's parts of this market that make a lot of sense.
There's housing related and there's everything else, right? I mean, when you look at the amount of people buying homes, what do you do when you buy a house?
Right.
You go buy paint.
Yeah.
You redo your yard. You buy a couch. Ethan Allen, Hooker Furniture, Stanley Furniture. Those stocks are all up this year. Right. The furniture stocks
who's
are
remodeling
up.
his house.
Even if you're putting a down payment on a home, whatever it might be, you don't have money left. You're not going to Macy's to get jeans because you're more worried about the curtains.
You bring up an important thing. Pulte Homes is up over 30%. KB Homes is up over 30% as well year to date. But you know what's hidden? The utility space. Utility space is up 12% year to date. Third best performance sector.
And because isn't that the new bond market?
Exactly. It could be. But in the last month, it's up 4%.
But the other thing today,
so the rest of the market got killed, and utilities actually wound up buying in. But technical basis, 2417 is your support short term right now, which is healthy.
On the S&P 500.
On the S&P cash, which is exactly the 100-day moving average, which is only 2.33% off the all-time highs.
See, I don't think you're saying chase utilities. I think you're identifying that utilities are up. I would say, though, at this point at 219, 218 on the 10-year, look at what happened today in copper. I think, if anything, you've got this trade, and we're at the bottom of a range on yields. I think the reflation trade is alive and well. Copper above $3. The last time we were here, it felt like it was the last solar eclipse. Look, this is a very important dynamic for this market.
But this didn't just happen in copper. This has been something.
I agree,
if you look over the last month and a half,
sustained.
you look at Freeport McMoran, and I know some of the names you like as well. We talked about it today on the halftime. Vale, some of these other names, huge upside call buying in Freeport and Vale and a lot of different names.
Let's stay macro here because, Tim, let's go back to your point with Guy Adami, which is the Fed. A lot of people forget this is the Jackson Hole week, which, by the way, is the biggest meeting of the year of central bank officials. If you just hear Jackson Hole, you're thinking when people going skiing or trout fishing. They're doing the latter, but they're also talking about Fed policy. Mario Draghi is giving a speech on Wednesday. Is this the next catalyst? Jackson Hole?
Tim has said for quite some time, probably correctly, that people are underestimating the importance of the Federal Reserve in the back half of this year. I happen to agree with them. I have no idea what they're going to do, but you have to believe that they will continue to assuage the markets of fears that they're going to tighten quicker than people want them to. I'm not sure, but I think if you're looking for something that could derail this, it comes in the form of central banks, specifically our Fed.
Do you think that's the biggest risk right now?
I personally do, yes.
It's the biggest risk maybe only because that's all that's in front of us right now, right? I mean, a little bit on the politics side, and the other side is whatever the Fed's going to be doing. I mean, you look at these big spikes in volatility, Sully. We've had 3 this year. We've had 4 since the president was elected. The night of the next day when he was elected, we got 22. We've had these big spikes. We had 1 in February. Then you go back and you start actually April, May, and now again in August. Volatility is back, but its sustainability is not there. Look how fast today you're down.
I love you. You're smart and you're bigger than I am, but you're wrong.
Is that right?
Yeah, you're bigger. Notice how I couched that at the beginning.
Well,
how can that be? How can that be the only thing?
I think you're incorrect on most of that statement.
How can that thing be the? How can that be the only thing ahead of us? We've got war games in North Korea, Pete. We've got a terrorist attack happening. I know. Right. But I'm saying those things are going on. How can the Fed
when have terrorist attacks?
Let him answer.
No, go ahead.
Well,
I'm not saying they are. I'm saying, but it's not the only thing in front of us.
But the market that we've had for the last 2 or 3 years has dealt with a lot of horrendous events,
of course,
in terms of glable terrorism, where you worry about global terrorism.
Right?
Yeah,
and at some point they won't.
They won't when they lead to populist measures and they lead to a reaction. And in Europe, I think that you're a lot closer to populism than people think, just because you've had a couple election cycles. I still believe we're at a place here. You got through a fantastic earnings season. The bar was 2 quarters ago, there was no bar. Now there's a bit of a bar.